presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom, good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock. You and Tim Ward and all the gang at TFNN, I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off 3 p.m. Eastern Time in Monday, and markets clawing back the losses from this morning. Talking about a move of 85 points from low to high, and that is a move, folks, from 9:15 this morning, not cherry picking some low at midnight. Right throughout the trading day, a little bit of a pullback into 2 o'clock, and we're trading higher yet again with S&Ps off by just 1 point. And when you look at this market, okay, we're off by 1 point. But if you calibrate where we actually went into Sunday night, right, you traded lower in the final hour of the trading session on the Moody's downgrade. We get it all back, and actually, and then some, right? Higher than where you were on Friday. We're right at that price level. NASDAQ 100, we're negative by 14 points right now. And yeah, you talk about a move, man. How about a move about 400 points from 9:30, the open this morning, up to 21,544. We're negative by just 13 points. The Dow, as I mentioned there, the 3 o'clock update, leading the way, led by UNH. When you got a company trading up $21 in a price-weighted index, UNH up by 7%, $312, and the Russell negative by about 0.7%. But how about the Russell? Good 25 points off of the lows that we had this morning. Lows made, right at about 9:30 a.m. So let's talk a little yields. Let's talk a little dollar, and that obviously ties into gold. But as I talked about as well, all right, we're clawing it back. We had quite the run here where everything was getting sold off, and someone's coming in and buying. That's for sure. We get the 10-year higher price, lower yield. That brings us back to 4.47% right now in the 10-year. You jump over the dollar, bouncing from the 100 point. Yet again, we're at 142, we'll call it. And gold, catching a bid on some dollar weakness. Gold up by about $50. Since we're talking yields, this one. Mortgage rates cross back over 7%. Now, after the U.S. credit downgrade, okay? But nonetheless, that's not what's driving this market. You know, we can talk about it. I talked about it this morning. You better believe it's the all-known fact, right? Moody's very late to the party. Doesn't mean it doesn't ring the bell and everyone remembers in terms of a reminder of where the debt is as we're passing another tax cut that is not paid for. We're going to add $5 trillion over a period of 10 years. But nonetheless, mortgage rates, that's a tough number, man. You get mortgage rates down to a 6, that could change the market. But guess what? The average rate, 7.04%. The highest level since April 11th. And boy, a 7 handle on a mortgage is a tough one, man. You jump to that, to Mr. Diamond. So he's doing some speaking today. And he's saying, hey, you know, this 10% tariff deal, we haven't had these price levels since the 70s. There's a lot of complacency going on in this market, and I would agree with him. We're going to tie it to the volume, okay? But there's nothing wrong with a fundamental look on top of the technicals. He's at the bank's investor day in New York. It's an extraordinary amount of complacency, Diamond said, noting the last time the country saw 10% tariffs, 1971, on all the partners. And yeah, it would make sense, right? You got Walmart out there, of course. President Trump coming back at Walmart saying they should eat them. But Diamond said Monday that he thought the stock markets could sell off by around 10% as companies lower their earnings estimates and investors to reappraise the value of U.S. equities. He also warned about a credit crunch that could ensnare companies used to easy financing. American asset prices, I still think they're kind of high. I think credit today is a bad risk. And all that is pricing in where we are. It's not, it's not selling doom and gloom to say the market might pull back 10% as we're dealing with some volatility here. As you take a look at this market, We're sitting at 6,000. 10% is 300. 5,700 brings us back to where we were last September, October, getting ready for the election. Nothing too dire from where we're talking about. And on a relative basis, we're rising a bit, but we're still talking about a 10-year yield at a pretty affordable 4.4 or so when you talk about where the U.S. is, the treasuries, and what that number stands for. But yeah, there is a little complacency. Now, we get into the volume, okay? I talked about this morning. But man, we're bumping up against this area, okay? And yeah, we got to charge higher, 59.72 in the S&Ps. This acceleration lower in the markets really began at about 59.80. We're within 10 points on the S&Ps in a 6,000-point index. And we had a level of sustained volume that we haven't had since. Can we go higher? Yeah. Do you have your back against the wall here to push through this area? We're going to see. It's going to take a lot to get through it. But we're charging higher with some strength today, and we'll probably get some volume. So we'll see if we can get a real volume bar here as we extend over 6,000 on the NASDAQ, on the S&Ps. You jump over the NASDAQ, same exact deal, okay? That high, 21,386, whether you go back to February 27th, if you go back a couple higher days higher, 21,453, and we're within, again, 20 points in the NASDAQ. And that's really where the selling volume began. The 27th of February, maybe you can make the case February 25th. It wasn't just the price action, okay, on the first move lower from February 18th highs in the markets, the all-time highs, wasn't just the price action. This is the volume action, folks, and we've got nothing like that, all right? We did 700,000 plus contracts for a few weeks in a row. For some context, in the last 6 weeks, we've only done that volume on 2 occasions. We did it for 3 straight weeks. In the last 6 weeks, we've done it twice. Remarkable level of strength to the downside here. We're clawing it back on fumes, and we'll see if we can get above it. You jump over the Dow, and there's the same price action, okay? There's all the volume on the Dow even, which I don't even like the Dow, right? But you see it. Look at the volume we were doing February 27th, 205,000 contracts, right? 215,000. All these in between, 180, 170, 180. How many are we doing now? How many contracts are we doing there now? 60,000, right? Yesterday, we did 58,000 contracts. We were doing 200 for a few weeks in a row on that first move lower. So there's a level of consolidation it's going to take to get through this area. And we haven't seen that consolidation take place. It would be very difficult for this entire market, okay, to blow through this area of volume. And I know I'm spending the whole first segment on the program. Folks, this is what I'm watching. All right, look at the volume there. Think about the consolidation you'll have to get through, right? That layer of trading activity that you got to get through. We're lifting up there on fumes. And it doesn't mean Diamond's going to be correct, all right? I always crack up as this goes forward. You got the Wall Street. Right? Yep. There's Bloomberg. They put him out there as well. Folks, he's not the only person saying it, okay? Of course, he gets headlines, rightfully so, but there's a distinct possibility that some of these lagging impacts, that Wall Street, that Walmart CFO, folks, all right, saying, have you seen the price hikes yet? They're coming. We might face a headwind. Market trading right now, though, strong day, clawing back those losses. S&P's off by 5. We got a lot to talk about. Stay tuned, folks. Come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. Welcome back, folks. S&P's off by 6, NASDAQ 100 off by about 36 right now. And we jump around to this market. Fed officials keeping rates in focus. And yeah, it would make sense, folks. How are you going to depict FOMC rate policies when you have no idea what the tariff landscape looks like, right? And that's basically what the Federal Reserve president is saying from New York. New York Fed Chief John Williams, it's not going to be that in June we're going to understand what's happening here, or in July. It's going to be a process of collecting data, getting a better picture, and watching things develop, okay? And the fact he says June, July, that's their meetings, right? He's no fool, okay? He wants the world to know that they're not going to have the data to make any decisions in June or July. So put September as a possibility out there. And then you had Atlanta Fed President Raphael Bostic saying he's leaning towards one rate cut. They're out there, okay? For me right now, I'm expecting it's going to take a bit longer for that to sort out. I'm leaning much more into one cut this year because I think it will take time, and then we'll sort of have to see. I worry a lot about the inflation side, and mainly because we're seeing expectations move in a troublesome way. That will make our job harder. You combine that with Walmart, folks, okay? Take the verbiage of the politics and everything out of it, okay? I mean, Walmart itself, you got a CFO going out there, man, that's it, okay? You got a CFO of a company like Walmart telling the world, hey, get ready for price hikes. In any other universe, the stock probably would have lost its mind, saying Walmart competes on price, right? Think about this. Walmart competes on price. They just came out and said price hikes are coming. But guess what? They're probably coming everywhere if they're coming at Walmart. And they compete very well on price. Have you ever been to Sam's? I kid. Love me some Sam's. Walmart been on a tear recently, clawing back the losses they had this morning. Over the weekend, you have the president saying that they should, I was almost going to be kind and say that they should try and eat those. They should eat those prices or whatever it is. Nonetheless, strength in Walmart. They came out with their numbers last week. Strong numbers. And yeah, even on the price hikes, okay? And here's the dynamic I keep finding myself looking at on Walmart right now. If you take a look at Walmart, you got two different scenarios here, okay? You get the run from 50 to 103. So you talk about an acceleration. On a PE basis, man, this thing is pushing some of the tech stocks in terms of a PE basis, how far you're going out, the price to earnings on this equity, okay? You look at things and the fact that we could be facing a little bit of a slowdown from consumers. But Walmart's all about staples, but Walmart's going to have to eat some of these prices. But then on a longer term basis, I find myself having the conversation, okay? You get up to 105.30 on the tiny one. Since then, we've pulled back on some volume a bit. We're trading at 98.01. 105.30 is the high there for Walmart. But this is when they do their best, right? When everybody, if the squeeze comes, I'm not saying, but this is, you want to game play certain probabilities of possibilities that can play out, right? Run the decision tree, okay? And then assign probabilities to those different possibilities of the decision tree. And one of those decision trees, okay, is that, yeah, there's going to be a bit of a squeeze. Prices are going to go up. Consumers are going to feel it. There's going to be inflation. You're going to be more conscious of your spending. And then as you go down that line, Walmart reaps the benefits. That's where they succeed, when people are squeezing their pocketbooks for everything they can get. Okay, it's when you're watching those purchases that they might have the ability. So in the short term, yeah, they're facing some heat right now. But the more I look at a company like Walmart, I say it's almost a win-win, right? They're doing well. If everything doesn't get squeezed, even better. They've already said the prices are coming. They'll absorb them when they can. They'll push some off to the consumers. And if it does get squeezed and everybody else gets squeezed, they'll probably, and this is what the CFO said on their earnings call, that they're well positioned on those areas to gain customer share on a longer term basis. Now, we had a real sign of strength here on the tariff reprieve, okay, but everybody did. You want to see some strength. And since then, we had some real numbers on their earnings, but not where we were here, okay? But you'd like to see some acceleration. You're going to have to come in and, boy, we got to get some volume. Again, this whole market, right? And look where the volume began in Walmart, okay? Almost similar to February 27th, right? Where are we backing it up? Yeah, that's where the volume began in the market. That's where it began in Walmart as well. So you have some volume at these tops on many good equities. All right, let's jump around some other retailers. Target shares today down about 1%, 97.57. Kohl's down about 0.5% right now. We jump over to one of the winners, TJX. Just on fire, as usual. Up by 1.2% for TJX shares to 134.97. Mickey D's up by 0.6%. Two of my favorites when you talk about channels, TJX and Mickey D's. And checking out what else we have going on. We talked about the Fed officials. We've talked mortgage rates. I mean, we could talk Moody's, but I think the writing's on the wall in the Moody's. As in, you talk about late to the party, period. And that's a great quote that you posted in there, Jimmy in the Den. I'll pull it up here, folks. If you haven't checked out the Tiger's Den, check it out. This one from Ray Dalio on Twitter. And what he says here, right, is regarding the U.S. debt downgrade, you should know the credit ratings understate credit risk. Understate, okay, because they only have to rate the risk of default. They don't include the greater risk that the countries in debt will print money to pay their debts, thus causing holders of the bonds to suffer losses from the decreased value of the money they're getting. You're going to get paid back in dollars. What kind of dollars are you going to get paid back in? Okay, keep your spikes up on this dollar index. Said differently, for those who care about the value of their money, the risks for U.S. government debt are greater than the rating agencies are conveying. I would say that's probably even putting it lightly, but strong words. And, everybody is always talking up their own book, okay? He's probably got $1 bajillion short on the U.S. dollar or something like that, as he's plowing it. Take it for what it's worth. That's the way you want to think about it, okay? But you better believe that an easy way to do that is to devalue your own currency, because it's approaching levels that unless you get some type of fiscal responsibility, the market is going to force that to play out. It's going to force it, okay? Because those are going to be the dynamics in play, and there's going to be, there's going to be buyers, there's going to be sellers, where supply equals demand. That relationship comes back to equilibrium at some point. It may get out of whack at some point, but it sure does. Jump around to some of the banks today. JP Morgan, down about 0.9% right now. Bank of America, flat. Citi up by 0.4% right now. Wells Fargo, down 0.3. See how the airline's doing. Yeah, basically flat day for the airlines as well. We jump around to some of the leaders. Apple shares, yeah, quite a dive lower for Apple this morning. They get it back, but Apple's still down by 1.5% right now. Amazon flat. They got a bid on the open with the rest of the market. Microsoft higher by almost 0.8% on today. Meta basically flat. All right, folks, stay tuned. S&P is off by 8. We got the NASDAQ 100 slightly in the red, off by 52. Stay tuned, folks. We're coming back in 3 minutes.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. S&P is off by about 7 points right now. NASDAQ 100, we're off by 42. And you talk about retail traders, man. Check out this one from Bloomberg, right? So the dive lower on the Moody's downgrade. The YOLO crowd, they step in and they buy. And how about $4.1 billion just by 12:30 in the afternoon? I'm reading this, right? And I'm going, because this just came out at 3 o'clock this afternoon. I'm going, is this talking about Friday? No, this is talking about today. That by 12:30 today, retail investors, individual investors purchased more than $4 billion of U.S. stocks, broke the $4 billion threshold by noon for the first time ever. We're dip buying today at the S&P at 6,000. Is this the new dip buying? Nonetheless, it was quite a buy, and it's quite an acceleration, and that's what the chart looks like. If you can see it, can I zoom in? Yeah, there it is. Yeah, that's the retail net imbalance in terms of how much buying came in by 12:30. You talk about a buy in the morning. You think about everything we've had going on with this tariffs, and we haven't had that much buying on any of these sessions. I guess the 90-day pause was in the afternoon, right? Was it? Or was it a little bit, maybe just not enough action before 12:30? The retail crowd accounted for 36% of trading volume. Single stocks being in here. This way. Hold on, where are we? Here we go. Single stocks accounted for $2.5 billion worth of retail purchases on Monday, while ETFs comprised $1.5 billion. Whew. Man, look at this. Tesla, $700 million inflow by 12:30 today. And Palantir. Boy. So what? That's some volume on the open, right? On a 5-minute basis, you do 3.6 million shares for an equity trading at $340 in Palantir. You're still down by 2%, but quite the pullback from 130. You're trading at 122.50 pre-market. 123 is the number. You take a look at longer term on this equity. It's on fire, man. Look at this thing. Palantir down 2%, but basically pushing the highs that we had from earlier in the year in February. Tesla, much different story, of course. But yeah, quite a bounce going on for Tesla shares off those lows recently of almost 212. So yeah, retail, they're ready. They're ready to buy. All right, we talk a little bit of Dick's Sporting Goods and Nike. So Dick's, they're buying Foot Locker for $2.4 billion. You rip lower on Thursday. Okay, Friday you're digesting it today as well, down by about 0.2% right now. There's your Foot Locker shares trading just under $24 a share, which is what they're going to buy them for. And then you jump over to Nike shares. Okay, Nike, a little bit of a lift. There's Nike on that Thursday. All right, notice a little bit of a lift you got, right? You got a low of $60.42, the high of $62.68. We put it on a 15-minute. And there you see Nike charge higher, okay? And here's potentially why. As you look at this two deal, who could be a winner? Well, how about Nike? Yeah, how about Nike being a potential winner? Dick's and Foot Locker, valued partner for decades, confident together they'll help elevate sport and continue to accelerate growth for our industry. And there's been some pushback here, okay, in terms of they're going to operate it as its own brand. They're going to have synergies in here. Okay, but as they're saying, they wouldn't have made this deal without getting Nike's view. Realistically, both Dick's and Nike want Nike products to be sold at full price and as many as possible. And now you can't play the two against each other, right? Yeah. So Nike's going to come in, and it's not like they can give them a better deal. They need Nike, right? Dick's and Foot Locker, they need Nike products in their stores. And now there's no leverage when those are two of the biggest competitors. Nike's relationship with the network of sports retailers has grown complicated, and Foot Locker, they've struggled to say the least, but nonetheless, only $2.4 billion, and I say that, quite a brand. Nike's enjoyed a better rapport with Dick's, which has chosen a key strategic partner while it was backing away from most others. They even got a loyalty program. All right, gold contracts still up about $50. We check out some gold equities. Let's check out some gold equities. We got Harmony shares up by about 1.7% right now, 1471. You know, it is remarkable, folks. I think gold's got a little bit of a pullback here, a little bit of a headwind. We'll see. If the dollar, you know, what's interesting here is that the dollar looks weak right now, which should help gold. But boy, gold struggling to catch a real meaningful bid, even with some extreme negative action in the dollar index. We're off from 102 to 100. And meanwhile, gold just kind of chopping around. You know, off of the lows of the pullback we had, but just consolidating near about 3,200 right now. Some of the strongest equities out there in that gold market, let's jump around to some of them, because I put out the gold report today. If you're checking out gold market, folks, check out the gold report. AEM, Agnico Eagle, one of the strongest equities out there. Right now, up 1.5%. You put this thing on a weekly, talk about an acceleration, man, right? AEM. Alamos Gold, another one. Almost looks a lot like AEM, this equity in particular. Quite a pullback from $31. You know, Harmony, as I mentioned, been on fire, but quite a pullback from almost $19 to $14.71. Let's see, what was it? Yeah, IM Gold, a strong one as well. Look at how this thing just extends. Right near the bottom part of that trading range. You get out of it a little bit. New Gold, another strong equity. Look at this thing. Still in the channel line for everything going on, just off the all-time highs. Kinross as well. Quite a little pullback. You complete a 1-to-1 A to B, C to D. You begin that A to B, C to D in February of 2024 when gold's trading at about $2,000. You trade up to 11, you back it off, and you do that same move. So you can see why, right? There's a lot of A to B, C to Ds that just completed here. Sand, not quite. Up to the 1 to 1.618, but well over the 1-to-1 expansion for Sandstorm. It's one of the smaller equities in the report, but a strong equity nonetheless. Just made all-time highs a couple weeks back at 891. We're trading at 824 right now. All right, we take a look at the volume in the equities coming in. We got about 22 minutes left in the trading session. And yeah, nothing too crazy. You got a Moody's downgrade. We've done about 1 million contracts in the S&P right now. You jump over the NASDAQ. We'll get an acceleration as we do, but nothing too stark. Volume, just chopping around. All right, folks, S&P is slightly in the red. We got about 22 minutes left in the trading session. Stay tuned, folks. We'll come back, take a look at some equities. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We pull up Netflix. You talk about a stock on fire, man. Let me take off some of these. We got too many lines on this chart, man, as it just breaks out of everything. But Netflix, you make all-time highs of $11.96 last week. Right now, we're trading off $5, off 0.4%. But in the battle of streaming, Sesame Street coming to Netflix. Streaming giant, along with PBS, is going to air new episodes of the show. Now, it was on Max, and this is where it's interesting when you dig into the. You have HBO Max. It was Max. Now they're bringing back HBO. At the same time, they're going to really focus on HBO. What are they doing? They're not worrying as much about maybe kids programming to a certain degree. Okay, maybe they're just going to focus on that award-winning HBO programming. And nonetheless, Netflix is going to jump in. 56th season. Yeah. 90 hours of previous episodes is what they'll get there as well. New episodes are going to air on PBS, PBS Kids, the same day they debut on Netflix. It's tough to find a place on Sesame Street with all the distractions that loom. But nonetheless, right, Netflix, and then you jump over to Warner Brothers right now. Not really market-making news, but nonetheless, you got Warner Brothers trading lower, but then you jump over to Paramount. Talk about CBS News, 60 Minutes with this president. And so you have the CEO of CBS News, CEO. She's stepping down. And if you saw that 60 Minutes clip a couple weeks ago, that Scott Pelley, who's awesome, love him, they end the 60 Minutes with talking of their producer stepped down, that our parent company, Paramount's trying to complete a merger. It's almost like a little bit of a mic drop, and they've been battling. Nonetheless, she's out, and they're trying to get a merger done. That has to go through the Trump administration. Nonetheless, she's out, so Paramount, bigger than that deal, but nonetheless, a lot going on in the streaming. Jump over to Comcast, down about 0.5%. Did you happen to catch the Preakness over the weekend? Poof. And then you have the players, of course. Scotty Scheffler, man, that guy's on fire, even with the driver they allow him to play with. But boy, the Preakness, that horse, speaking of journalism, right? Is it journalism? A journalist? Boy, that horse, I've never seen horses battle it out, moving and shaking and pushing each other as like they were running that day. Pretty awesome. All right, yields just chopping around. That run we had, just chopping around. These are 5-minute bars. Since I basically came on the program, we have the 10-year at about 4.47 right now. And remember, we're coming into Memorial Day weekend. So, schools in Florida, this is our last week. I think the kids last week, maybe Thursday. Teachers, they have their day on Friday, and then they're done. You come into Memorial Day. I know in the Northeast, you're close as well, but that's always a nice kickoff in summer, man. It's hot in Florida. It's summer already in Florida, folks. But you could see things calm down towards the end of the week. People, whether it's end of the day, Thursday, Friday morning, Friday trailing off, we've already been light. So, yeah, maybe we get some action. But realistically, you're talking about coming into a long weekend when this market will probably just kind of die down a bit as we come into Thursday and Friday trading. The one disclaimer on that is that when you have low volume on some of these days, you can actually get more volatility in the market. When you get less players in the market, certain players can move that market further than you would normally if you had more volume to absorb some of those moves. But all things considered, Memorial Day coming into the summer, yeah. All right, what else do we got going on? We talked about Paramount, Sesame Street. Yeah, Mr. Dalio and Mr. Diamond. Yes, this is it. Crude. Perfect. So, you jump over to crude. Now, the news is that President Trump, he's spoken to everybody. And they're all talking, and they're talking about peace in terms of Ukraine and Russia, right? President Trump has said Ukraine and Russia would begin talks immediately on ending the war after a phone call, I suppose with expectation set so low. Any progress, right? Yeah, I would say so. One analyst chiming in. Light on details, but nonetheless, keep that one because it would make sense you get a little bit of a pop there. You really get some type of deal? Yeah, I imagine. But guess what? Saudi Arabia, they're still pumping plenty of oil, man. Right now, the top of the boundary, top of the range, it's about $65 on crude. All right, Walmart holding its own flat today. We check in on UNH getting quite a bid. Yeah, it's not stopping. Up by 7.7%. You can see why people like buying dogs, man. You time that thing right, you're up by $65 from the lows of $248. But be careful, man, as you never know what's coming in the future of this equity. Criminal charges, potentially, Medicare fraud, not stating the books. Need quick fingers playing those types of trades. Target off by 1.1. That's a tough one, man. Be careful in Target. I love Target. I love the shopping experience, but boy, this is a tough-looking chart on Target, man. You're pushing the lows right now. I mean, this thing, we got some symmetry here bringing this thing back to $100, but boy, $60 is possible. That would do it all. That would be the entire give back of everything we did since 2018. And the chart, I mean, look at the volume we've got in the last couple of months, right? Look at the volume the last couple of months we've got to the downside. Everything else got a bounce. Target didn't. Target, you kicked off the year at 135. You traded lower on back-to-back months, pushing lows that we haven't seen in Target shares since 2020. Yeah, there's some symmetry. Now, in the same way, right? Disney, yeah, now you're bumping into an area that could be resistance on Disney. Quite the acceleration, but you might have to digest these gains. We're back to the 115 price level, and that's where you traded all the way from election to where the market faded at the beginning of March. Go a little longer-term picture on Disney, same exact thing, right? You see how many times we've touched this 120 area, and then just right back to 80. See if Iger has this thing turned around this time. Yeah, Microsoft just so strong recently. Up another 0.8% today. And look at this thing, man. We're just off all-time highs at 468. We put it back on a weekly, a longer term. Boy. Quite a buy at 2021 prices on that lower to $350. And yeah, same deal. Going to take some volume, right? Going to take some real momentum to get through these highs. We based that level basically from June of last year all the way till we touched there in December. You almost got where we were in January, and now we're just above those levels. And on a volume basis, you really don't have it at these highs just yet to break through that area for Microsoft. But man, Microsoft looking one of the strongest equities in this market right now. Amazon positive right now as the S&P's getting into positive territory. S&P is positive by 1. One more segment, folks. We're coming back to finish it up. Don't go away. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Apologies, folks. Not sure how that happened. Thanks to my producer to ringing me up. We come back right now. We got the S&Ps up by 1 point right now. We get the NASDAQ 100 up by 1 point. Quite a far cry from where we began the trading session. You had the S&Ps up by, almost 80 points from where we were this morning. We're trading at about 5,900. We're trading at 5,975. NASDAQ 100 slightly in the red. And as I mentioned, UFNA driving the Dow higher. You'll see that Dow. Remember, that Dow being positive, all about UNH, up by 8% almost at 315 for UNH crude, $62. We check back in on gold right now. Gold just chopping around, man. Very little volatility for the gold contract for the most part of the day. Up by $48 or 1.5%. We check back in on yields. The 10-year, 4.47 right now. The 10-year and the dollar. Oof. Testing that 100 price point yet again. 100.064 was the number early this morning. But yeah, testing that critical area of 100. We'll see if we can get a bid. But nonetheless, weakness right now continue chopping around that 100 price point in the dollar. Yeah, how about those dip buyers, man? $4 billion by 12:30 in the afternoon. Not bad. 600-something million of Tesla alone, 400 million of Palantir. And that'll lift the market. We got green. Green in the S&Ps, green in the NASDAQ, green in the Dow. We'll see where the volume comes in. It'll be decent. But check out the daily. No huge number right now. Just over 1 million contracts. We're going to come in more than Friday. But S&P is pushing 6,000. Folks, thanks so much. I'm coming back for the 4 o'clock update. Have a great night. Have a safe night, folks. And we'll see you back here at 9 o'clock tomorrow with the morning market kickoff. Have a great night, everybody.
Building wealth